Alright guys, so the implosion has begun. But is this the main event? Now we don't know, but it's looking really nasty. Even the awesome earnings and projections from Nvidia couldn't save the markets from melting down. We are in a bubble. Valuations are sky high. The world has been pumping so much money into US stocks, and when things really collapse, it could really take down the entire global system. And let's quantify the magnitude of this crisis. The top 10 US companies, which are mostly big tech, dominate the world market. It's even bigger than the entire Chinese stock market. There is an extreme amount of money concentrated here, and everyone is still being sold the dream of US AI. Now, ladies and gents, this isn't just a US bubble, it has morphed into a global stock bubble. Because of the dollar collapse, a ton of investors around the world, they are parking their money in US big tech. Yes, some are flowing to assets like gold, but more funds are being lured in by the promise of AI. Now, the narrative is simple. Trump's planned and tariff war will make the US the center of AI. Companies will buy more chips, they'll build more data centers, and finally, we will all reach the holy grail, which is AGI. That will allow America to be the most productive country in the world and export their technology everywhere else. But even elements in Congress are beginning to realize, wait a minute, we aren't making money from all these investments. It's beginning to look more and more like a shell game at a street corner just a few blocks away.
So the entire US economy growth can be tracked down to 7 companies and their AI growth specifically. At least 40% of economic growth this year is attributed to these companies alone, and 80% of stock gains this year came from AI companies. But people are justifying these levels of investment because of the promises that the CEOs make that there will be a return. So for a company like OpenAI, their value is based on the expectation that they're going to figure out how to make a profit out of it, and they haven't.
As we said before, the US lacks a cohesive manufacturing base that can really leverage the power of AI. But the spin doctors at Nvidia, OpenAI, and all the tech companies have allowed things to reach ahead. And it's not just AOC mentioning how ridiculous things have gotten. The big boys in Wall Street are also questioning valuations. According to Goldman, the stock market has already priced in the AI boom. $19 trillion of market value are running way ahead of the actual economic impact. In other words, we might have hit the ceiling. And when you are at the top, there's only one direction left to go, and that is a horrific plunge down. Well, the collapse just happened yesterday. This was after Jensen Huang hyped the market, telling everyone that AI was the future, that Nvidia was ready to rake in over $80 billion next quarter. And the carnage was insane. The S&P lost over $2 trillion of market cap in a matter of hours. The total damage at the end of the day was close to $3 trillion. Despite blowout earnings, despite record revenues, Nvidia collapsed as well. They went from plus 6% to minus 3%. Investors are not worried about today, they are terrified about the future. Are the projections up high in the sky? Can the chip buying continue indefinitely? There's literally panic on Wall Street. Everyone is searching for clues on why the collapse happened. But do we really need a magnifying glass for this one? Banks are saying it's due to overhedging, others are saying it's just profit taking. Could it simply be simple panic? Now, firstly, is this meltdown truly over? I don't think so. If the bubble is truly imploding, we have to collapse all the way down to the mean. It will probably overshoot because of how insane things are. But let's look at things here just conservatively. I'm not saying this is it, but the downside can get really horrific. US stocks, which are dominated by big tech, are at insane valuations. Their P ratios are at above 90th percentile. From where we are, a 20 to 30% correction or collapse down isn't unrealistic. We are above 21 today, and the median is 16. That's a long way down, and that's without considering the panic that will ensue. US markets are just so overpriced. But remember, guys, there's no crying in the casino. If you're part of this game, you signed up for the risk knowing that it's a bubble. We are just sketching out scenarios here. It's not fear mongering, it's getting mentally prepared. And let's say it's not a full implosion but a flash correction. How bad can it get? Even if that's the case, the picture won't be pretty. We now live in a world where prices can only go up. If it stalls or drops, it is a catastrophe. Now, can we all remember Trump's taco in April? That was when US stocks and bonds collapsed because of the tariffs. That forced Trump into a reversal at the 90-day pause. During that period, the S&P collapsed by over 10%. The drop was around 11%, which means the pain we are seeing today could easily triple. Things are so overpriced that just a 10% correction would be a fall of over 600 points. So brace for impact here, guys. US tech companies today are playing it really close to the razor's edge. Companies like Amazon, Microsoft, Meta, and Oracle, they are tripling down everything on AI. And these are your hyperscalers. These are your big boys that are pumping in tons of money to build endless amounts, fields of data centers, probably enough to fill an entire city. In 2025 alone, we have over $320 billion in capex commitments from these hyperscalers. Yes, a lot of money. These companies are throwing a lot into this black hole. But for how long can this last? Investors and shareholders will demand a return. You can't stay in this limbo forever. Oracle, for example, will be facing negative cash flow for at least 4 to 5 years. There are so many things that can go wrong in the next few months, not to mention years. Main Street is getting hollowed out, and now Wall Street is also getting very panicky. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one-stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SEANFOO. Start your gold stacking journey today. Everything must go right during this period, guys. Sales have to come in, a recession must not happen, and a re escalation with China will be unthinkable. US tech revenue cannot afford to collapse. Now, back in the dot-com bubble, we saw two big trends that peaked before the crash. Capex to sales went over 13%, and capex to free cash flow went above 60%. In other words, the majority of available money was funneled into investments. That would mean data centers today. We have capex to sales above 10%. If an external shock happens, we could see big tech cash flow dry up and the ratio relative to capex spike to the moon. That would signal extreme overinvestment. It's like out of every $10 you have, $6 goes to building data centers. And what happens if a recession happens? Can you make payroll if revenue dries up? It could be this that pops the entire bubble. Just too many black swans circling around. Now, what's worse is the administration is ignoring the underlying health of the economy. Besant himself is a hype machine and just doing his little game of show and tell again. The truth is being obscured and the underlying economy is rotting. Besant has selective memory when displaying the facts. Yes, September added nearly 120,000 jobs, that's true. But he forgot to mention unemployment. It has rebounded up to 4.4% in the same month. That's the highest level since 2021. In October, layoffs reached a massive 153 grand. This is not normal. Main Street is collapsing, which will directly impact this tech AI bubble. It is Main Street that drives consumption. If people keep losing their jobs, how can they drive revenue to all these big tech firms? And without revenue, The hyperscalers will be forced to take on more debt to fund the AI dream. And that would increase the odds of a collapse. It would increase the intensity of said collapse. It won't look good. Now, within the US itself, we have a ton of problems that could pop the bubble. However, let's talk about the external shocks. Now, the first is Japan. I know this sounds weird, this sounds unconnected, but it actually is. Japanese investors are some of the biggest whales that have money in US equities. The yen is one of the few currencies that is still collapsing against the dollar. So dollar assets, at least to the Japanese, were looking good in 2025. But things are changing. Thanks to Japan's new stimulus, two things are happening. The Japanese stock market is starting to move much higher. Bond yields in Japan have also surged to a record 3.77% on the 40-year. So as a local Japanese investor, you might just pull your money out of the United States. If the AI bubble continues to pop, then obviously tech stocks or the Max 7 will crash lower. Demand for dollars might also get compromised. Dollar strength could get seriously hammered down, and that could trigger a capital flight away from US assets, especially the tech stocks. Plus, the stimulus in Japan is going to directly benefit Japanese stocks. This makes things worse for the S&P. The bubble has to keep growing. Even if it stalls, investors will project the end of the world. That's just the threat from Japan. There's a bigger risk, and that is coming from China. Yesterday, we talked about how Chinese AI is almost on par with the US, but they're doing it at a much cheaper rate. Chinese companies have full government support that includes heavily subsidized power. Their entire ecosystem has one singular goal, and that is to win the AI race. Now, this includes Chinese brainpower as well. How did DeepSeek even start? From the entire Chinese research ecosystem itself. Take China's Tsinghua University alone. This one university has surpassed all US colleges when it comes to AI patents. They produce so many patents that the chart looks so ridiculous. The US maybe has 100 patents or so in AI and machine learning. Sounds awesome. But China has easily 800. That's 8 times the output. The Chinese AI ecosystem has a lot of brain power. Tsinghua has more AI patents than Harvard, Princeton, MIT, all the Ivy Leagues combined. And understand how crazy that is. Sooner or later, we'll get another Chinese breakthrough. If the Chinese manage to get more software workarounds and they reduce the need for more advanced AI chips, then suddenly the US bubble gets even more exposed. We must not underestimate the threat of a Chinese Black Swan event. DeepSeek might be the first, but it won't be the last. The next one could be magnitudes bigger. In 2020, China graduated over 3.5 million students in STEM. That is an entire army of talent ready to enter tech and AI. According to Beijing, the number has grown tremendously. In 2024, China graduated 5 million students in STEM. Chinese competition is only going to get fiercer. Can the US AI bubble really survive all these black swans? Valuations just don't make sense. Japanese money living is a real threat, and now Chinese tech is catching up. Plus, Beijing can do it at a fraction of the cost as well, and that means cheaper and faster AI solutions. So, understand the enormous risk piling up for the US. People ask me if I think it is a bubble. Yes, I believe it's a bubble. Doesn't mean it can't get bigger. Are we at the start of the implosion? Maybe. And if we are, there's a lot more downside left. But let me know what you think. Is this the start of the end? Or can Trump somehow keep the AI bubble going? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these insane times.